Hello everyone, welcome back to the USA Federal Income Tax Calculation Basics. In this part, we will talk about gross income, adjusted gross income, and different tax brackets, and we'll start talking about marginal and average tax rates and do some simple calculations. But in the part 4, we'll be doing real quick and fun calculations. So let's learn about computing the tax base. Income tax is assessed on adjusted gross income, which is AGI, minus deductions and exemptions. So you have your gross income. This is a total of an individual's various sources of income. So this is my total paycheck, the maximum number. Then you have adjusted gross income, AGI, an individual's gross income minus, so this one minus certain deductions, and such as contributions to your retirement and IRAs, 401k, 403b, all those good stuff. And then we have taxable income. So taxable income is the amount of income that you have after subtracting exemptions and deductions from the adjusted gross income. Okay, so let's get a little bit in more detail. So adjustments, what are those adjustments? Vary over time, but they currently include some contributions to the retirement savings, alimony paid for a former spouse or children, not former children, but your children, child support payments, health insurance premiums paid by the self-employed, one half of the payroll taxes paid by the self-employed, educator expenses and interest paid on student loans, contributions to the health savings accounts, HSAs, and flexible savings accounts, FSAs, expenses for job-related moves, and also interest paid on student loans. Well, we talked about that, but it's, I wanted to write it again. To form adjusted gross income from gross income, you need to subtract exemptions and deductions from it. Exemptions, this is a fixed amount a taxpayer can subtract from AGI for dependent member of the household, as well as for the taxpayer and taxpayer's spouse. So if you're single, you have no exemptions. If you have a spouse and 10 more children, you are gonna be paying less tax because of the increase in number of exemptions. Taxpayers can take one of the two kinds of deductions. There's standard deduction, fixed amount that a taxpayer can deduct from taxable income depending on the status, or there's itemized deduction. When I say depending on status, this is basically, are you filing as a single, married, filing jointly, or are you a head of household, or married but filing separately. Itemized deductions, so this is different. You either do standard or itemized. This is an alternative to the standard deduction, whereby a taxpayer will actually list all the possible deductions. So deducts the total amount of money spent on various expenses, such as gifts to the charity, interest on the mortgage, and also in some cases the property taxes paid. Okay, so allowable deductions for claiming itemized deductions include, as I said, donations to charity, medical and dental expenses if it exceeds 10% of your adjusted gross income. Let's say I made $90,000 and then, my adjusted gross income is $90,000 and I had health care expenses of $20,000, which seems really excessive, but you can actually claim this in itemized deduction sense. Other taxes paid, such as state, local income taxes, interest paid on investments and home mortgages, gifts to charity, casualty and theft loss. This could be fire, so on and so forth. Unreimbursed employee expenses. Let's say I had to travel for work. My employer did not reimburse me. I can itemize this deduction. Let's talk about tax rates and taxes paid. So we also have tax credits. So this is the amounts by which taxpayers are allowed to reduce the taxes they owe to the government through spending, for example, on childcare. So you do have childcare tax credit or dependent care tax credit. What is withholding? So government starts withholding, let's say it's year 2000, I'm just making it up. From January to December paychecks, government will withhold your taxes. So you've already paid a bunch of money, right? And then you calculate your taxes. If your taxes are less than that, you're going to get tax refund. If you owe more, then you're going to have to pay even more. Withholding is a subtraction of estimated taxes owed directly from a worker's earnings. This is automatic. Refund is the difference between the amount withheld by government from a worker's earnings and the taxes owed if the former is higher. So if government withheld more, you're going to get refund. Okay, so I'm going to show you a federal income tax schedule. This is 2020. It's been changed, right? So this is marginal tax rate. Marginal tax rate means the dollar you're paying on, the tax you're paying on the very last dollar, okay? So these are different levels of taxable incomes. So if you're an individual who makes only exactly 19,750, you're just going to pay 10% of that. So you're going to pay $1,975 taxes on the first 19,750. If you made more than that, then first 19,750 you paid 10%, and starting from 19,750 to the whatever level you're at, you're gonna pay, for instance, 12%. I'm going to calculate an example. Let's say my adjusted gross income, my taxable income, I apologize, is $180,000. That's a lot of money. $108,000. So how is my tax calculated? First of all, what's the marginal tax? Marginal tax is the tax you pay on the last dollar earned. Last dollar earned is right here. I believe this looks like 22%. I'm going to say 22%. So I am paying 22 cents in the last dollar I make here. So that's your marginal tax rate. My average tax rate is totally different. Why? Because I'm paying 10% first on the first 19,750. So from 19,750 to 80,250, I am paying, what is it, 12%? 12% paid from 19,750. I'm going to use my calculator, folks, because I don't want to make a mistake. So 70,250 minus 19,750, $60,500. So for the next $60,500, I'm paying 12% taxes. Multiply. What's next? From 80,250 to 171.50. I'm subject to, I want to say this is, I'm just going to say 21% taxes from 80,250 till 171.50. So 171.50 minus 80,250. That's 90 for the next $90,000. I'm paying 21%. 80. And from $171.50 to 180, that is going to be 180 minus 171.50. So the last portion is $8,950. I'm paying 22% taxes on this. Okay, so how do you find total tax paid? It's very easy. You multiply 10% with this, 12% with 60,500, 21% with this amount, 22% with this amount, and add that number, that X number, divided by your total taxable income. That's going to give you your average tax rate. Marginal tax rate is easy to see, 22%. Let's take a look at something else. Let's take a look at a more recent number, 2023 federal tax brackets. So you are, for instance, if you're single, you're paying 10% of the first 11,000 paid. You're single, let's say you make $180,000. Your marginal tax rate will be, for instance, 24%. Married filing jointly, it's little different. The cutoff points, brackets are different. Head of the household. When I see head of the household, I think about Roman Reigns, who's a wrestler, and their team is called the head of the table. So I'm sorry, I was watching WrestleMania. He is the winner this year, Roman Reigns. Just check it. Head of table, wrestling. So let's say Roman Reigns makes $6 million. I just made it up. I don't know how much he makes, but he doesn't make 100,000. Let's say he made $6 million. We could actually check that. I don't know if it's online. But what Roman Reigns pays is his marginal tax rate is $37 million. That means 37%. I'm sorry. So that means I'm talking about his millions. The $6 million he makes he makes $6 million. The last dollar is taxed at the 37%. However, for the first $15,700, he's only paying 10% of that. So he's paying $1,570, just like us. And then next bracket is here. He only pays 12% of in this interval. However, once his earnings exceed $578,101, he's paying 37% of that. Okay, in the next part, we're actually going to work on a specific example. We're going to clearly define the marginal tax rate, average tax rate, and we're going to work on, as I said, a cool example. Don't forget to hit the like button if you have not done so, and subscribe to this channel. Enough said. I warn you every video. I hope you're here still with me. If you are still watching this video, comment below, I am still here, Dr. G. Okay? I'll see you in the next video. It's gonna be fun. Bye.